for our subscription model versus value pricing. We're going to talk a lot today about pricing models, what the difference is, because I know there's a lot of confusion on this topic, right? So it's, hourly billing, value-based pricing, subscription-based, are those two the same? So I'm joined here today with my friend Seth David from Nerd Enterprises. And I'll introduce myself real quick. I'll let Seth introduce himself real quick. But so I'm Ted McRae with Makers Hub. I've been in this industry for, I don't know, like 30 years. Started with companies like 80 Paychecks. From Paychecks, went to a tiny little company, probably some of you have, called Intuit. Was a recycling employee at Intuit for 10 years. And then went to an even smaller company. I was one of the first 15 employees at Zero US. And so I made my way to a couple more places, but that's me. I call myself a self-proclaimed propeller head. That just means I absolutely love technology. So I'm going to let Seth go ahead and introduce himself, and then we'll go through agendas and such.
All right. Well, I am Seth David, Chief Nerd and founder and CEO of Nerd Enterprises Incorporated, which is another way of saying I'm also a propeller head, which to me means I'm a nerd, right? And Ted, I did not know you worked for Zero. That's interesting.
Yeah, back in 2012.
Got it. I remember when Zero was new to the US. I remember those days well. So anyway, that's me in a nutshell. Right. I'm a nerd. I like nerdy things. I love to learn. I love to create. And here we are. That's why we're here. It's because I love to create and then share what I've learned about what I've created.
And Seth, honestly, is one of the biggest nerds I know as far as like technology is concerned, and just has a really good insight on this whole pricing model, advisory services, and all these other things. So let's get in and talk about what we're going to get into. So we've done our introductions. What I'd like, if possible, is if you all in the audience could just give us a shout out, let us know where you're listening in from, first of all, because there's two reasons for this. I want to keep this as unscripted as possible, which means if you have questions on this whole value pricing subscription model, then it would be great for us to be able to converse here. And then secondly, this is where if the polling questions for whatever reason don't pull up for you, this is where you can type in the answers. So here's what we're going to do. We're going to do housekeeping, which is just talking about CPE credit. We're going to do a one-on-one deep dive with Seth into this whole pricing model. And then at the end, if need be, we'll do our questions and we'll answer them. I'd like to answer them live throughout the whole thing. So if you could, that would be awesome. Again, if you can find the questions panel, just give me a shout out. Let me know that you can hear us, because that's the most important thing, right, Seth, that they can hear us and see the screen.
I mean, unless they're really good at lip reading.
Yeah.
Right? And then I have to look at the camera and make sure.
Yeah, right. Okay, I can hear and see. Thanks, Chris. Appreciate the comment. Everyone else is just real quiet. So let's talk about CPE credit, because this is worth one CPE credit if you need it. All right. The caveats to getting that CPE credit is you need to be here for a NASBA hour, which is kind of like a hot minute, but it's a 50-minute hour. Okay. That's the first thing. The second one is you need to participate. And participation comes in the form of polling questions. Yay. There's going to be 4 polling questions on this webinar. You need to answer at least 3. So that's the heavy lifting for you guys. Be here, stay awake by answering the polling questions, and then at the end, just evaluate. All right. So an evaluation is just how well we did. Did we know what we were talking about? And then you just rate us like 1 to 5 or whatever it is. So let's get this because we don't see a chat. Oh, we see your Q&A. Oh yeah. So Linda, Q&A, sorry, this is the Q&A answer where it says questions. That's where you guys can, I don't have chat open. I'd rather just do it through the questions panel. That way we can make sure that everyone's there. And Linda, I'm glad you're here. I met Linda like many moons ago. I'm not sure if it's when I worked for Intuit or when I worked for Xero, but nice to see you here. So Seth, the topic about like this value-based pricing slash subscription-based, hourly-based, it's buzzing always around in the accounting world, right? And many firms are thinking of pricing models, especially with quote unquote advisory services. So you recently, there was a post kind of sprung this whole webinar that you made. I think I saw it on Facebook, and it posted like the subscription business model. If you think the subscription business model is just value-based pricing in a new dress, you're completely wrong. So let's kind of start with that, because that's an interesting. When I saw it, I'm like, value-based pricing is subscription pricing because it pays a monthly fee. So let's start with that.
Sure. So, and it came, by the way, from something I had posted months and months ago when I was just beginning to launch the Holistic Accountant, which a big part of that program is based on guiding accountants and bookkeepers through the transformation of going into a subscription model from whatever their current structure is. And I remember posting something about subscription model, etc. And somebody wrote a comment saying, oh, that's just value pricing in a new dress. And I was like, oh no. And it's funny because a lot of times getting sort of challenged like that on social media would make me very nervous. But in this case, I was like, oh my God, this is brilliant. This is the perfect opportunity, because this is a classic example of something that people don't really understand, something that I could speak to that goes against conventional thinking. Because at this point, conventional thinking in our industry, at least, and probably well beyond, is exactly what you said, Ted, that, oh, they're the same, right? It's just a different name for it. And the truth is, one of the things that inspired me to design the whole entire Holistic Accountant program was that as I was reading the book Time's Up, which is where I learned all about the subscription model, a little way in, I started learning like how very different it was, right? So for example, value pricing definitely was an improvement over hourly billing, right? And one of the first things we said on the heels of that was stop tracking time. There's no value in that, right? There's no value in how many hours I spent doing the thing. And for that, there's no value in how many transactions I processed for a client. I still see it. I still cringe when I see people talking about pricing things that way, right? But in value pricing, you define outcomes, you agree on scope, and then you create a quote based on what that outcome's value is to that specific client, which is subjective, and it can vary from client to client. That's value pricing in a nutshell. It is just a pricing strategy. It is not an entire business model. That's one of the key distinctions is subscription model, and it's right there in the title. It's a whole business model, well beyond just a pricing strategy.
So for anyone that's heard Seth talking about Time's Up, Time's Up was authored by Paul Dunn and Ron Baker. And Ron, honestly, is like, I feel like the godfather of value pricing, right? He's been talking about it forever. He does speeches all over the place about it and really understands like the reasoning behind value pricing. But like everything in our industry, it's evolving, right? It needs to evolve because it was hard enough to get people away from hourly billing and think about like a value-based billing, because they just didn't understand, well, how can I make money not, how do I explain that to my clients? Are they going to want to pay $700 a month instead of $80 an hour? That just doesn't make sense to me. So I actually met Ron when I was at Intuit the first time, and that was like 15 plus years ago. So anyway, anyone that doesn't know, besides Seth, who knows this like the back of his hand, Ron's a good person to at least get that book, because I think that's an awesome book. So we're going to do our first polling question though, Seth, really quickly, and then we're going to get into some questions for you. All right. Our first polling question is, has your firm experienced or experimented, sorry, with a new pricing model in the past few years? And if so, which model did you try? We're still using hourly billing, which is 17%. We've implemented value-based pricing. We've adopted a subscription model. We've tested a hybrid or a tiered model. We haven't changed our pricing approach yet. So I do the 5-second rule when I do my polling questions. And my 5-second rule isn't like when you drop a cookie on the ground and you have 5 seconds to pick it up. My 5-second rule is when we get to about 90% voted or 1 minute that the polling question has been open, then I just say 5-second rule. We're going to be closing the polling question down. Okay. We're 5-second rule. We're 93% voted. I am going to close this bad boy down, and we'll get into like breaking down, because you said like the value pricing is a pricing strategy. What exactly do you mean by that?
It's purely a strategy around how to set pricing for each new customer that you take on. Right? It doesn't go beyond that. It's just based. It's a sort of framework for how to price your services. And for example, what it means is that each new customer that comes in your door, they're going to get a separate quote, even if it's the same service you already offer to 3 other people. If you're offering primarily the same thing, you're going to come up with a different quote for them. You know, again, it's based on outcomes, which is great. It should be, but it's going to be different because value is subjective. And so what may be worth one amount to one person may be worth a lot more to somebody else. So if somebody else feels it's worth a lot more, then you're going to charge them a lot more. And honestly, I never liked that. I never, even though I understand why that is the way it is, I never liked that. I always felt that was sort of unfair.
Yeah,
right?
so basically, if you have 2 clients that know each other and you didn't know about that, and they find out that you're, they have a shared accountant, and they're like, oh, so he does a great job. Yeah, and he only charges me $800 a month, and the other person's like, he charges me $1,200 a month. Well, what is he doing? I mean, it's kind of weird to price it like that, right? It almost feels like a car dealership. Like I go in and I'm a good negotiator, I get a good deal, and you go in not being a good negotiator, and you get a horrible deal just because you value the car more than I do, or whatever the reason is.
Yeah.
Shouldn't be that way.
Yeah, and it's like if 2 people come to me for the same services and one rolls up in a BMW and the other one's like in an Oldsmobile, I'm going to charge more to the one in the BMW because I assume it's worth more to him because he can afford to pay more. Again, to me, that doesn't seem fair, but I'm oversimplifying. But in a word, that is the essence of the subjectiveness of value pricing.
So contrast that then with the subscription model. So, because like I said, when I first read your thing, I'm like, oh, I've been talking about value-based pricing forever because I'm a kind of a nerd about it. And then when I read that and you and I talked, I'm like, oh, okay. So I've kind of been doing a hybrid of value-based and subscription when I've been talking about it with people, but kind of explain that whole subscription and what the real difference is.
So the reason I think a lot of people confuse the two as being the same, that subscription model is just value pricing and a new dress, is because both of them, what they both have in common is the structure of having 3 different tiers and a different price for each tier, right? And obviously at the lowest tier, they're getting the least amount, and in the middle and so on all the way up to the highest tier, right? But the difference is, the first difference, which is where we depart right after that, is in what you're associating the value with, what you're assigning value to. In value pricing, as I said, you're assigning value to the outcomes, which was great. It was, again, a major improvement over hourly. In the subscription model, by contrast, and the best way I can explain this is think of a subscription you already have. So for example, when I look at my Netflix bill every month, and I pay whatever it is, like $18 a month, because if we have a 2-household thing where my wife and I can watch the same thing, whatever. The thing is, I don't look at that bill and say, well, shit, I'm only using 10% of your programming. I want you to discount my fee by 90% on that basis. Netflix would laugh at me. if I said that. And that's the concept here is I am going to price the entire portfolio of services that's offered at each level, regardless of whether or not they're using it. Now, the downside for them may be that they're paying for things they're not using, but the upside is when they inevitably want those things, they're going to be delighted because I'm going to be able to say, great. And sometimes they'll come to me and say, well, I need this other service you offer. I haven't been, using you for this up until now. How much more is that going to cost? And they're going to be delighted when I say, nothing, it's already priced in. It's included in the subscription level that you're at. Or, hey, you know what? I'm happy to offer this. It's actually at our next tier in our subscription model. So I just need to slide you up to that tier. And now you have access to this and a bunch of other stuff that you might not need yet, but it's there if you ever do. Right? So that's the basic difference in terms of the pricing part of the subscription model is I'm pricing the portfolio of services that I offer regardless of whether they're using it all. And this simplifies everything. I don't quote from one client to the next. Everybody pays the same, whichever level they're at. And basically my job when somebody's coming in my door is to look at this situation and figure out which level they need to be in, based on what their needs are.
Based on what their needs are, not based on transactions, not based on any of that stuff, really. Now, and when we were talking, and I like this analogy, that the subscription model is like an all-you-can-eat buffet, right, with 3 menus. Well, if you just go to an all-you-can-eat buffet, which would be the value-based pricing menu, or even the subscription menu, sorry, and you don't want one of the things on the lowest tier, you're like, hey, I don't eat like fried rice, so can I get like $3 off my price? That's not the way it is, right? It's like, no, okay, then don't eat it.
Yeah, exactly. You just don't use that thing you don't need.
Yeah. Okay, so Theo on here asked if there's ever been a situation where you started out value-based quote, but later switched to hourly because you found out that it would take too long and explained it to your client.
So my response to that is if that happens, it's because you didn't price it correctly in the value pricing model. The truth is, and this is where it's hard for us to get our heads wrapped around changing from hourly to value-based or subscription, is in effect what we often wind up doing there is what we do is it's kind of like this. We start off when we try to make this transition by doing what I would describe as hourly billing disguised as value pricing, meaning I say, okay, fine, I got to go to a flat rate. So I'm going to say, well, normally this takes me 10 hours a month to do. Here's the hourly rate I would charge, multiply that out, and there's my monthly fee. Again, we're still attaching value to the hours instead of where it should be attached, which is to the outcomes and value pricing in subscription models, so the whole entire portfolio of services. And I'll give you a very clear example from my direct experience where it finally hit home with me. And this was before a subscription, but it got me into value pricing. It made it so that I never wanted to do hourly ever again, is where I had a client coming in my door who reached out to me, said, I need to QuickBooks desktop company set up. I have 2 different manufacturing companies. They essentially do the same thing. It's a little different product lines. And I need bill of materials and all this. And when he initially came to me with that description, I thought he just needed me to set up the companies and build out his chart of accounts. So I'm like, $500 a piece. I was trying to go the value pricing route. And he said, no, I think this is a bigger job than that. He's like, maybe I didn't explain it correctly. And then he went on to explain that he needed the bills of materials built into QuickBooks Desktop. And so it was a lot more involved. And he said to me, he told me what the value was. This is a perfect illustration of value pricing. He said, I think it's more like a $5,000 job. And I thought about it, now understanding what he needed, and I could quickly think through, okay, I know how to use an import tool. I know how to build the spreadsheets out, and his staff is going to have to fill that out for me anyway, because I don't know what the bill of materials are. But once I get that back from them, I can have the bill of materials imported into each of the 2 companies in like 30 minutes, mapping it and all. And then he also wanted me to fly to Vegas, which is where he was located, for a day to train his accountants on how to use the system. So I said, done, 5,000 all in. The truth is,
did you charge him a little bit more because you had to fly to Vegas?
No, included.
I'm kidding, because you just told me your thoughts on Las Vegas, so I was wondering.
Oh, that's right. Yeah, no, at that time I may not have really formed that opinion of Vegas yet. But the truth is, for $5K, I spent probably 30 minutes setting those 2 QuickBooks desktop files up. right? And so, and the ticket, by the way, from Los Angeles to Vegas is nothing. It's like $100 or something. So
Yeah.
I was like included. I flew out there. He picked me up at the airport, spent the day. We had lunch. I flew home. And then I was done. I mean, I provided them with a way to get ongoing training from me, but that was basically, so that's when I understood. I mean, if I charge by the hour, even if I charge for an 8-hour a day on site times whatever hourly rate I would have charged, it would have been a small fraction of the 5K that I ended up getting. And that's the point, really, is that when we price things based on value and not hours or any kind of volume like number of transactions, if we're doing this right, then we generally should command so much more money that, like I said, you have an experience like the one I had that I just described, I never ever wanted to charge by the hour again.
So we talk about, like, I mean, when we talk about what the customer values, and not pricing on the value, but just like what they value, what have you found is the best way to find out what a customer values and what to put in those packages and things like that? Is there like not like a formula, but how would you go about, okay, what do I want to offer? How do I price that? Is there any formula or any kind of hints that you can give on that?
Yes, I mean, and I want to qualify it by saying that, and this is very typical of what I learned once I learned what the difference is in terms of getting into a subscription model. Even the KPIs we analyze are very different now. And what I mean by that is, again, even the way you phrase the question suggests that you're still kind of used to leaning into the value pricing side of things, right? Because we're asking, what is the customer value? It's the wrong question.
Okay.
Right? So the right question is, and I'll explain it by explaining an exercise I have my members do in the Holistic Accountant, right? And by the way, that's one cue, is that they're now members. They're not customers even, or clients, right? They are members, meaning they are in my exclusive club, and there's a very different kind of vibe to that. And this points to what I'm talking about. In the subscription model, a lot of the things, the kinds of things we measure are much more subjective in nature. It's not about what the customer values per se. What I actually have people do as we're designing what their subscriptions are going to look like is I start off with a 7-column list of services that one could offer as an accountant or bookkeeper. It comes right out of the Time's Up book, right? Ron, I think this is actually Paul Dunn who created this model. It's like all the things you could offer, and they divide it into 7 columns based on the left end. These are the things that you would probably more likely offer to the smaller, less mature companies, and all the way to the right is the stuff you would typically do for the larger companies who have different needs consistent with being a bigger, more mature company. And so what I do is everything I do now is built on Notion and the use of Notion, and Notion made this a very easy exercise to create. Is I took their columns, I actually just dropped it into ChatGPT to convert it to text that I could manipulate, put it in Notion, and then from there, we create the 3 tiers, right, to describe the 3 different levels that we're going to define now. And I say, go through each thing in each of these columns and drag each thing into the appropriate tier. And then there's a 4th column, and that's the things I'm not going to offer at all. I just don't want to do it, or I don't have the experience to do it, whatever. So we actually have 4 columns. 3 are the things we're going to offer at each level. The 4th one is, this is the stuff I don't want to do. Like, I don't want to process payroll. I'll book payroll, but I never want to process payroll. It's boring, it's compliance, and it's, to me, very low value. Same with sales tax. I'd rather just use Avalara. So that's the exercise. Once we define that, then I start pricing it, and I don't think for a minute, I don't care what the value is to the customer. And I know that sounds harsh, but bear with me on this for a minute. What I really want to know is, and this is my favorite way of putting it, and this is how I even approached value pricing when I was really trying to wrap my head around that. What I want people to do is look at the list of things they're going to offer, and remember, that's what we're pricing, is this entire portfolio. If I'm assuming somebody comes in and uses every single one of these services of mine that I'm going to offer at this level, what is that worth? And another way of asking that question is, how much money would get me excited to do the work? Another important thing to put into this picture, so you understand it's an important bit of context, is in the subscription model, we're not looking for 100 clients paying us like $250 a month. That's the problem a lot of us are in, is that we're up to our eyeballs in work and don't make nearly enough money, and we can't keep up, and we can't take on any more clients if we wanted to. right? The
Yeah,
model, the
you know what? The
subscription.
value-based pricing model was supposed to, in reality, was supposed to in theory was supposed to fix that. Like
Right.
what I told you, the more efficient, and you're like, and you told me that's not right. We'll talk about that later. The
Mhm.
more efficient you are in value-based pricing, this was the theory, the more clients you could take on. But in practice, like you just said, low value clients almost take up more time, more of your precious time than some of the higher value clients.
Yeah. Yep. And again, I think the reason value pricing didn't accomplish what it was meant to there in a lot of cases is because of what I said earlier, that really all we've done is repackaged hourly into a flat fee model because we've based those prices on how many hours we think it's going to take. And the whole idea is to completely divorce ourselves from that way of thinking, which is why I love the example of my Vegas company, where it was so far beyond what I ever would have thought to charge if I was charging by the hour. If I, in those days, I don't know what I was charging. Even if I was charging $100 an hour, it would have been like $800 for the day in Vegas. And let's just say I would have charged $1,000 all in if I was going by the hour, most likely, right? Instead, I got 5,000.
And did that turn into a recurring revenue client, or was that a one-time thing?
It was meant to be ongoing after that, where I created a resource for them where they could ask questions and I provided training. For whatever reason, he never explained it to me. The guy just sort of ghosted me after that, but I guess they had what they needed and they stopped reaching out, and okay.
Got it.
But it could have. If it did, I would have just charged a flat monthly fee, and I had them in a platform that doesn't exist anymore where they could get in and ask me questions. I don't answer them. Today it would be Slack or like Circle or something, right?
Yeah.
But and so that's even the model that I suggest, like for anyone trying to figure out how to break into a subscription service. The first thing, because it's just the easiest thing to do, is set up like a Slack workspace, or I like Circle better now, but that's a different conversation for another day. But create a space where people can come in and have their own private area where they can ask you an unlimited amount of questions, and you'll answer anything they ask you within a business day, and charge them like $500 a month for that. Then if they want one-on-one, there's a separate fee for that, right? So anytime they want like a one-on-one, because just answering questions in a text platform is not going to do it, then you say, all right, for an hour, I'll charge you like $250. And
so would you include that like in a subscription model plan? Hey, on the lowest one, you can Slack me. This is how I communicate between these hours. But if you're in the next tier, you get more hours plus 2 hours of consulting face-to-face time. Or like, would you do something like that, or no?
We're basing it on hours again, right?
Yeah.
So the whole idea is it's unlimited. So what I would do is the only limit I would place is, and again, this is just from trying to get started. If we're skipping what I just explained and going straight to the full-on subscription model,
yeah,
again, it's a concierge service. It's not, it's priced in such a way that when somebody reaches out to me because they have questions, it's no longer a disruption in my day. I'm going to welcome it because I'm getting paid so well that I encourage it, because the more they ask me questions and involve me and engage me to provide them with the services they're paying me for, the more likely, the more that's going to point to the lifetime value of the customer.
Yeah, the more happier they're going to be to write that check at the beginning of each month.
And they're not even going to write the check because they're going to be charged automatically every month in some kind of a automatic payment processing model. And by the way, I'm not even joking. That's an important piece of it, because the other thing that comes up under that heading, which I know is not in our notes based on what we had discussed when we were planning this, is the question comes up, well, should I offer them an option to pay annually and maybe save a little money? And the answer is a flat out no. And the reason why is because as soon as you mentioned writing a check, and I know you're sort of joking, is if I charge them annually, even though it might seem like a benefit, like they'll save a little bit of money on that, the problem is then once a year, they see it coming. They see this huge bill. And it gives them, it's that much more likely they're going to be like, that's a lot of money. I don't want to.
25K is a lot of money right now.
Right. But when they're paying monthly and it's automatically charged on a payment method, they barely see it. I mean, sure, it's going to download in their banking, but guess who's doing that, right?
Yeah.
So they're just, it's just psychological. They're just less likely to think about canceling. by the way, another component of the subscription model that I love is the absolute sheer confidence that we're taught we have to go at this with, which includes the fact that we always make it very clear and easy for them to understand where they can go if they ever want to cancel.
Yeah.
Believe it or not, it's things like that that I learned are a part of the subscription model that made me fall in love with it. There's so much to this. There's such a high degree of integrity about all of this that, like, there's so many things I can talk to you for 2 hours about all the reasons I love it.
You're telling them exactly what they're getting, right?
Yeah.
Do you think it's important now? Like, okay, you have everything that they're getting on the model. When you send over your new client, your onboarding documents and your new client contracts, would you specifically state in there, like, your services only include what is in this list?
Yes.
Talk about that a little bit, would you? Like,
So,
because
yeah.
you and I talked about that a bit, like problems with the subscription model and putting pricing on it and stuff like that.
Yeah. So one of the things, going back to that exercise I described, where we have the 3 tiers and the 4th one listing the things we don't do, I was cautioned by Ron Baker directly, because this is when I was like taking notes, and I actually shared with Ron what I was doing with the holistic accountant and how I was developing the lessons, and because he knew that a lot of what I was teaching was based on what I learned from making an extremely thorough study of their book, plus Getting Things Done and a number of other resources. And so when I was sharing this exercise with him, I actually showed it to him on a Zoom. I'm like, look what I came up with, and he thought it was so cool. But when he saw that I was how I was handling that 4th column, which was the list of things we're not going to do, he told me, he said, be careful to tell people never to publish that. He said it wouldn't likely come up on a smaller firm, but with some larger firms, what happened was they would publish that list of things they don't do. And one firm, at least in particular, that he was referring to, not by name, of course, he said they actually got sued because one of their members claimed that since it wasn't on the list of things they didn't do, that it should be something they do, and that should be included. So yes, going back to your question, as we design and define our subscription model, we need to be very clear, especially in the engagement letter and elsewhere. This is what we do at each of these levels, and then explicit language that says if it's not listed, we don't do it, period. Or it's not included, period. And never show them the list of things you don't do.
Never say we don't do this, that, or the other. Just say if it's not listed here, then it's
not included, period.
We're not doing it at all. Cool.
Yeah.
We're going to get to polling question number dos. So just give me a second here. Launch. Okay, so this one is, what's the biggest factor holding you back from moving to a subscription-based pricing model? And it is unsure how to structure tiers and offerings, the fear of losing clients during the transition, difficulty defining value in our services, lack of confidence in our current systems or process, and then we've already moved to a subscription model. And you know what, Seth, I wanted to talk about and I know we didn't discuss like value, but you and I have talked about like in a sense we have, not on this call, but the transformation, right, economy.
Mm-hmm.
And in my thought, the way that the subscription model works as far as what the value is that whole it really supports the subscription model, the transformation economy. So when we're done with this poll, can you kind of just briefly talk about that, like the transformation economy? And I'm going to close this polling question down, y'all. So I'm going to read and share these real quick, Mr. Seth, just so the biggest factor for people is unsure how to structure tiers and offerings.
Yeah.
Okay. The fear of losing clients during the transition, the difficulty defining value in services, or how you're going to transform, lack of confidence in the current systems, that's minor. And then we have 13%. So after you talk kind of about like I hate to say value, but like the transformation, because that is kind of like what how you should be explaining your services to clients, right? About the about the
Mhm.
transformation, or am I totally off here?
No, that's 100% spot on. The thing I didn't make clear, because this kind of thing is the nature of it is such that we have to kind of step into it and explaining it to people, right? So the way I described it so far is that the way we're defining value is based on the value of the entire portfolio of services offered at each of those levels. But what comes on the heels of that, right? And by the way, that exercise I described goes to what was the number one concern here. I described the exact exercise that we used to alleviate that concern, where again, I list out all the services you offer and have you drag and drop things and move things around until you're satisfied that this makes sense to offer at the lowest level, middle, the highest, and so on, right? That's how we get clear on what to offer at what level. So once I have that defined and I can look at that, the one thing that I can pull out of that is I can define the transformation that I can accomplish for people at each of those levels. And ultimately, that's where the real value is in the transformation that I can affect for a customer. And I'll use a simple example. In fact, I just did this morning on my 97 and up call, so it's perfect timing. Is we talked about defining transformations for accounting and bookkeeping customers and members, meaning the transformation that the accountant and bookkeeper can take their own members through, okay? The first one, easy to see and understand, the cleanup job, right? What's the transformation? Taking the books from a state of chaos to a state of clarity. That's the real transformation. It's not something I can measure other than by having my customer or member come back to me once I'm done and say to me, yeah, these numbers look right. Have them go through their own balance sheet. And they say, yes, I have 100% confidence. These bank account balances are accurate. Yeah, my receivables are accurate. If I sent a confirmation to every one of these customers, they would agree that this is what they owe, and on down the line, right? That's the cleanup job transformation. The question on that you have to answer is, what does done look like? That's a very getting things done concept. What does done look like? How do I know I'm done cleaning up their books? Well, the way I like to define this is the books are bulletproof, or in other words, impenetrable. In other words, if somebody wants to come and audit or for any other reason scrutinize those books, I'm ready. Bring it on. I am that confident that I can prove every single number. That's the transformation of a cleanup job, which then gives rise to the question we could never ask before that moment, which is now looking at my customer or member and asking them, now that we have really reliable information, when I run that balance sheet P&L and heaven forbid a statement of cash flows, analyze and understand the information presented and what those assertions all mean, now I can ask the important question that a lot of us don't ever get to ask, which is, what's possible?
Yep.
Right? Nature looks for possibilities. That's a rough quote right out of the Time's Up book, right? Nature looks for possibilities. And I love that way of defining what advisory really means, what transformation looks like from the perspective of the person who's trying to guide somebody through that transformation, is being able to get to the point where I can ask them that question is, now that we have this, what's possible? What can we achieve? What can we unlock? How can I change your life?
So I always thought, like, because I do this for a webinar that I do on CPA Academy about your favorite subject, CAS. But talking more about like coming from the services economy into the transformation economy. So the experience economy into the transformation economy. And if you think about like people that said struggling defining the value in the services, or like what that transformation is. Think about like in the services economy or experience economy, it was about how it made you feel, like going into the Apple store or into Starbucks. It was like an experience. The transformation economy, and Seth, correct me if I'm wrong, is more about, think about your iPhone, or those of you that have Androids. It's not just a phone anymore, right? It actually makes you, without like the screen time and the zombie, it actually makes you better at what you do. So if you like taking pictures, it's got built-in AI and just tremendous things that it can do with the post picture like editing. And if you think about like it makes you a better communicator by having like Google Translate in there and AI things and all of this other stuff, and it makes you a better like person just holistically with schedules and events, tracking your health and all these other things. So that's really like what transformation should look like to a business, right? Your
Mm-hmm.
your your firm should make them better at what they do, and that should be maybe the value that we talk about
Mhm.
to our clients. I don't know. Am I off there?
No, in fact, that's my second transformation. The first transformation is the cleanup job. The second transformation is working with my customers or members on defining and then writing up their operating system, which consists of all their processes, right? And that's another thing. And I've learned this from Ron Baker and Ed Kless, especially, how important language is, the terms that we use, right? We often use the term systems plural, but what Ed in particular has really pounded into me over the recent years is that there's only one operating, he refers to it as just one system. I've liked to define it as the operating system, the entire system in which I operate, and that system is comprised of lots of processes, right? And so that's the second transformation. Once I get somebody's books cleaned up, now I've already by then got a lot of information I need to develop and design and write my own SOPs for how I handle that customer's accounting and bookkeeping, starting with my process for handling their banking and every single bank and credit card account that they have, so very specific to them. Now I can write up those SOPs. But once I'm done with that, and once I've become kind of an expert on writing SOPs, now I can work with my customer or member and work with them bigger picture on their own SOPs and processes, right? And because now the financials are touching everything, right? In the subscription model, there's a specific prescription for how to conduct a meeting. They're called RAP sheets, which stands for review, analyze, and plan, right? And there's a specific, so this is what I mean. It's so far beyond value pricing because there's a specific structure for how to conduct a meeting so that the meetings don't go beyond 45 minutes, so they're focused and structured, right? And one of the things we can look at there is sort of operational efficiency and what I call an operational variance report, which is to say, here are the goals we've laid out and here's where we're at in relation to those goals, right? And so that's where we start really defining the transformation. So, and one of the parts of that, one of the review pieces is looking at what we've achieved operationally, let's say in the last month, assuming we're doing this monthly, and then being able to point to the impact on the financial statements. So for example, even though I'm not going to do marketing for my members, I certainly can report on the impact of the marketing. So if I have helped them write the SOP for their marketing process for how they're going to run their Google ads and Facebook ads and so on, if I'm aware of that because I helped them design that process, I'm not going to do the marketing. I don't know enough about that. That's out of my area. But what I can do is being aware of that SOP and the fact that they're running a particular Google ad campaign, let's say, I can look at their financials. And when we do our monthly wrap sheet and meeting, I can say, hey, you started running this Google ad campaign a month ago. I'm not seeing the impact in the revenue in the top line. So then it brings up questions. Is it effective or am I missing a piece? Maybe the campaign is not designed to directly impact revenue, but rather build a pipeline. And maybe I've got a funnel that I'm getting leads into. That's something I wouldn't see in the financials. But again, the idea is to take what I am aware of, point it to the financials, explain what I do or don't see compared to what I would expect, right? Operational variance, and then come back to them and let them tell me, no, actually it is working. It's filling up a pipeline. You should see the impact in revenue in the next 6 months, whatever it is.
So you and I talked about scope creep, I think is what you called it, right? And I don't know if and that would be more in the value base. What is scope creep?
So scope creep comes out of value-based pricing, and it doesn't come out of hourly because the more they ask you to do, the more they're going to pay, right? Until you start getting more efficient, and then it takes you less time, and now you're losing money, but that's a different conversation.
Or you run out of hours to charge them, right? Because there's only 168 hours in a week.
Sure, yeah. Right, but the idea is that puts you on a hamster wheel where as you get better at your job, you have to work so much harder and take on more clients to make the same amount of money instead of being rewarded for getting better at what you do. So with value pricing, you have scope creep because as we defined at the beginning, we're pricing things based on outcomes. And based on that, we've defined here are the things we're going to do for you. And then what typically happens is they come in and they say, hey, you know what, can you do this one little thing for me? And you don't feel like nitpicking about it. So you say, sure, no problem. And then that happens 10 more times over a period of a few months. And before you know it, you're doing a lot of extra work because as it turns out, those little things that they asked you to do turned into bigger ongoing things that you're now doing that you're not getting, that you didn't charge extra for, even though you should have, right? And so that's what scope creep essentially looks like. And then eventually it gets to a point where now you have to have a conversation and say, hey, you know what, I'm doing all these extra things and I need to increase the billing for it. And sometimes they'll acknowledge and say, hey, you know what, you're right. I totally appreciate what you do. That's what you hope for. But unfortunately, in many cases, you get pushback.
Yeah, like Deb is saying here, it's like what she said is the subscription. The hardest thing is switching to the subscription model and pricing and losing clients because they already struggle with their rates. So that, you don't want to have to adjust your prices every time somebody wants to add services. Now you can say, okay, those services are actually in the next tier.
Yeah, it simplifies the conversation. And I also want to speak to what to do about existing clients, especially ones that have been loyal to you and so on.
Yeah.
Right. So, because obviously this comes up in holistic accounting. So here's what I've told my members in that program, because this will come up every time. As we're moving to the subscription model, and once we get it nailed down and defined, we have our levels, and then we have names that we associate with them. That gets into some of the marketing aspects where we want to present the pricing tiers in a way that's sort of memorable and creative. We don't want to just do boring like tall venti grande, whatever. So then we get to the question of, well, I have existing clients. I've had them for years. Theoretically, based on what I've now defined in my subscription plan, they should be in the middle tier, but it's 5 times what they're charging now. There's no way. I know they can't afford it, regardless, and I don't want to lose the client. So what I say is then leave them alone, or create a special tier just for the existing clients that you can't easily move into the subscription. Let them stay there for a while. Meanwhile, we're going to get into how you can get in front of the right new members going forward who are going to come into the subscriptions, and they don't get that tier, they get the new tiers, right? So you start building and building, and then eventually you'll decide, look, you can keep those clients forever if you just love working with them. There's no reason not to, right? Or maybe in a perfect storm, what happens is you continue working with those clients that you've had. You reward their loyalty by continuing to work with them, even though they're now paying a fraction of what others are paying for essentially the same things. But maybe you get them to grow with you and eventually just move them in. So little by little you move over, because then there's also going to be those ones that really clearly don't appreciate your value. And that is going to be forced out in these conversations, at which point you leave them alone at first, build the leverage you need by filling up your tiers with the new kinds of members that you're going for, ones who can afford much higher fees. And there's a whole different conversation around how to get in front of those people. But a lot of it stems from having the subscription model really clearly defined. And with that, a very, very deep, narrow definition of a unique audience. The more you do that, the more magnetic the attraction when you have your messaging out there for marketing purposes. So that's the very quick answer to how to build that. So you build the leverage, and then you have a choice. You can keep the ones that have been loyal that you love. Any ones that you don't, just let them go.
Yeah, because you all have those A, B, and C type clients, right? Get rid of the C clients that are the problem in this type of a model. So let's shift gears into, I know this word is one that you don't like, but into efficiency, right? So no matter which model you use, and I know you're going to correct me on efficiency, but efficiency seems critical to me, but there's a little bit of a change in efficiency. How do you see it playing into the models?
So I think it goes back to what I described in terms of the big picture of how we want to focus on one system, and the fact that we have lots of processes inside that system, and they all need to work together. And I'm not saying there's no place for efficiency. I'm saying that effectiveness is more important than efficiency, right? So effectiveness is greater than efficiency. And the easiest example I can give you about something that's very efficient for the firm, but it's a horrible thing to do to your customer or member, is that 200-page tax organizer that you're throwing at them. Here's somebody's coming to you and saying, I need you to take this stuff off my plate. I don't have time for it. I need somebody who knows what they're doing to take care of it for me. And the first thing you're going to do is give them more work to do in the form of a 200-page tax organizer. So the answer to that is have the information in a checklist or whatever you need to make sure you've captured all the stuff that 200-page tax organizer is designed to capture. But get on a Zoom with the client. This is where it gets very inefficient for you as the firm, but it's much more effective, because remember, what we're pricing is the portfolio of services, and with that, the transformation that comes with that. But here's what we're really pricing in at the highest level of all of this, is the relationship that we have with them. And I can guarantee you, in terms of lifetime value of a customer, or what we're now going to call a member, I can guarantee you the value of what you're doing for them will skyrocket so much when, instead of throwing a 200-page tax organizer at them, you just get on a Zoom and have a conversation with them. And throughout that conversation, you infuse the questions that you need answered, and you make the notes. You do the work. That's what they're paying you for. And again, you'll be happy to do it when they're paying you $2,500, $5,000 a month or something along those lines, because that's what we're talking about in the subscription model. The days of $250 a month clients have to go. It's just not worth it for you, unless you want to build a business that's like the Budweiser of accounting, where you're just processing, you know, accounting transactions and financial statements for people just so they can get a return done, you know, like very low value, high volume.
Yeah, and there's absolutely, I mean, in a case like that, if you win them by price, you're going to lose them by price as well, because there's nothing different about you in a model like that, right? If you go for these larger clients and you have this whole transformation and the subscription and their members, there's something completely different from you being their, you know, their accountant, their advisor, whatever you want to call it, than the guy down the street. So that's what differentiates you as well, right? From the Joe Blow down the hallway in your, you know, wherever your business is.
Yeah, there are going to be processes that I have that are intentionally inefficient because they're much more effective, because they point to building the value of the relationship itself. You know, it's again, the whole idea is, I don't want 100, 150 clients. I want 30 clients, 30 members paying me 5 times the amount that I'm used to getting now, especially on an hourly basis, right? That's what I'm talking about. That's why a lot of us struggle wrapping our heads around how to get from the older models into a model like this, is because, like I said earlier, we're still effectively associating the value. We're calculating the pricing based on some assumption about the hours, and we have to get to a point where we say, I don't care how many hours it takes, because I'm getting paid so well to do this work that I'll spend all the time I need to.
Yeah, and I enjoy doing it more than the $250 a month client.
And at these levels, going back to something you asked about earlier, you know, about like a one-on-one, at these levels, it may not include a one-on-one on a schedule, but if somebody needs, you know, it happened to me this week. One of my members needed help. I was teaching the process of developing the financial forecast, and she had trouble getting hers to balance. And so I jumped on a one-on-one call with her, and I helped her balance it, and I was happy to.
So it's, you know what I've always said, like, I had a CPA that I worked with, I think when I was with Zero, and they're like, you know what I want to be for my clients, and it's kind of like what you're talking about here, and for your members, because I'm you know, a part of some of the stuff that you guys do. And one of the things that it's about building trust, and the CPA told me, I want my client to call me to ask me like their advice on what tires they should buy for their Ford, because they know that I have a truck too. That I want to have that trust and communication, that they're not just asking me about, you know, staying tax compliant. They're asking me real things that are building the trust.
Yep. And let's put it this way, to kind of drive that point home in terms of the difference in the kinds of conversations and where the value is coming from. If you want to track time, how about tracking how much of their time you saved this month? That would be a valuable metric.
Yeah. If you got that itch to track time, the time you save them.
Track it for your customers.
So this brings me to the next thing, and that's for effective efficiency to technology. And so you've worked with Makers Hub a bit, right? And so how does Makers Hub fit into the discussion of this whole schedule or subscription?
So accounts payable, of course, is one of the critical processes in the whole operating system, right? And so this is where I definitely want to be efficient about it. I want to make sure that I'm capturing all the information I need to. If it's a simple service-based business, it's no big deal. But even there, I want them to be able to forward their bills into a process inside of my system where I can quickly analyze those bills. And here's the most important thing. Now we're getting into the getting things done methodology and how that plays into this picture, because I need to understand two really critical things, actually four, but two more important things at any given time. What do I need to do next, and what's most important to me? And tying that over into the accounts payable process, I need to know which bills need to get paid, which ones can wait. And I need a process or a system or an app like Makers Hub that makes it really easy for me to have the visibility I need, for me to create the approval process that I want, for me to be able to automatically code things in. One of the things and I'll shamelessly promote Makers Hub because I don't work for Makers Hub and I'm not getting paid that way. But the reality is what made me fall really in love with Makers Hub is even with a detailed system where there's job costing, provided, of course, I can get the information done properly from the suppliers, let's say, I can build a rule that says, look for this PO number, and when you see this PO number or something in the description, code it to this job. So the idea is those kind of compliance things that often create a lot of friction in my accounts payable process can be resolved, not just improved, but resolved, so that at the end of the day, what I want to really be able to do, going back to working in an advisory capacity with my client, let's talk about the cash flow impact of this, right? What I don't want to do cash flow wise with accounts payable is slow down that lever and pay vendors slower to improve cash flow. It's the wrong way. It's going to backfire on me. However, what I would love to be able to do, and Makers Hub makes this very easy to do, is be able to analyze which of these bills gives me a discount for paying timely. I want to prioritize those because that's going to make my vendors extra happy, and it's going to save me money in the form of 10% or whatever I get as a discount for paying timely. That's the kind of intel I want, so I can advise my clients and say, look, over the long haul, I can save you thousands by using a process, by designing a process that allows us to analyze where do we get the discounts from, and if everything else is the same, those are the bills I want to pay first.
And not just Makers Hub, it's almost any. So you say firms have one system, and then they have a bunch of other, what did you call it before? Processes. So like you have your one system. Would you consider that like QuickBooks or something like that? And then you have the processes that feed into it, or how would you explain that?
I would say QuickBooks is more of a process. It's the app I use to handle the accounting process, but bigger picture. And where for me Notion comes in, Notion is my operating system. It is the system in which I operate. And the reason I am comfortable referring to it that way is because in Notion, I track everything that I need to do in a system I can trust, including bookmarks. I use browser bookmarks, but it's not really what I rely on as my main system. The idea is in my Notion system, I put everything I need right at my fingertips, including and especially the one thing all these other project management apps don't really deal with well is your SOPs, which are the recipes for all these processes, right? My favorite example of this is you as the firm owner are the executive chef, right? Your staff are the line cooks. Your SOPs are your recipes, and the line cook's job is to execute those recipes. So QuickBooks Online is just the app I'm using for my accounting process, and I have an SOP, probably a bunch of them for how I handle things, including the accounts payable process. And that underscores what I mean when I say you have lots and lots of processes that all have to work together, and sometimes for the whole system to work most effectively, some of those processes need to be less efficient. In other areas, of course, I want to be as efficient. I always want to be as efficient as possible, as long as I'm not sacrificing quality or effectiveness in the process.
Got it. So we're going to launch 2 polling questions right in a row. And the one is just, would you like to learn more about? I don't know why Makers Hub got cut off, but this one is, would you like to learn more about Makers Hub? And it's yes, I'd like a free trial. No, not at this time. Please set me up with a one-on-one demo to learn more. And that's it. So we'll leave this open for a second. We have one more. So it shows up on the next line. I don't know. So
yeah, I see it.
I don't know. Oh, it shows up on the next line. Oh, that's weird. I can't see it on my side. Sorry. So Caroline says that they have one of the members that call her his mentor. So that's pretty cool, right? I mean, thinking about that. Hey, I trust you so much that I call you my mentor. And you know, my wife has her own firm as well. And it's just, she's like so excited when somebody says, we appreciate what you're doing. Thank you. You took us from not knowing where anything is and knowing where all of our money is. It's just really nice to get those like attaboy type things, right?
Yep. No, that means job well done, right? That's a transformation, right? You just described a perfect transformation, taking somebody from not knowing where anything is to knowing where everything is. And to qualify that one step further is, can they find it in 30 seconds or less when they need it, no matter how long it's been? That's one of my rules of organizing things. Everything needs to be organized, categorized, and easily referenced.
So we're going to do polling question number 4. And that is your firm currently planning on considering a transition to a subscription-based model? We're exploring the idea, but not ready yet. Yes, we've already started. We're planning within the next year, or no, we plan to stay with our current model. So we're right at an hour here, Seth, and I was worried halfway through that we weren't going to be able to make the whole hour, but luckily we did. I just want to say thank you, Seth, to you, but most importantly to all the attendees that joined today. I know your time is valuable. And I really appreciate you investing your time with us on this call. So this is going to be available for review as well, so you can watch it again. And I will send the link out to everybody in my thank you email as well. Seth, is there anything that you want to say in closing here?
I just hope that anybody who watched got a lot of value out of it. That's my goal.
Theo says, great presentation. So thank you, Theo. We really appreciate it. Okay, we are at the 1 hour mark. Again, Seth, thank you so much for joining. I'm going to try to do things like this at least once a month with all different types of people. So you're my first.
All right. Well, I hope this builds good momentum.
Thanks, Seth. Have a great day.
You too.
Thanks, everyone.